The future infrastructure of AI is could be our crypto.
And I think this is just a matter of months.
The relationship between Ether and its software, they moved together in sync for a long time. Now we see a divergence where the software stocks have gone parabolic.
And I think it's now just going to be, again, just a matter of weeks before the Ethereum crisis reflected it. Oil is the root driver of inflation. So if there's an inflation problem created by oil, then it means central banks have to be tight globally. And that's actually what we're saying. Oil prices have gone up. Petroleum products have been supplies and then were severely impacted. And our policymakers have to raise interest rates. So if the war ends, I think that you're going to see a collapse in oil. In fact, if any of you are technicians, you know that this is probably likely, that if the war ends, the tariff premium will come out of oil, and then at least see $40. Ethereum has huge negative correlation to oil right now. In fact, it's the highest inverse correlation ever in the history of Ethereum. So clearly, rising oil is negative for ETH price. You can see it statistically. And if you don't believe me about inflation and oil, take a look at this chart. This chart starts 1985. The top chart is the price change of oil. The bottom is with your CPI. And as you can see, every time we hit a sustained spike in oil, core CPI accelerates higher. So if this is a long war, we're going to have inflation. And in fact, the FOMC last month said the same thing. In their minutes, they said that policy firming would be appropriate if inflation were to continue and persist above 2%. So central banks don't want inflation above 2%. If oil stays high, they're going to be hawkish. However, we're betting on a war that ends soon. The second positive catalyst on the macro is the Clarity Act. It's a huge deal. We all know why Clarity Act matters. It provides a legitimate framework for crypto to proliferate in the US, but also with financial institutions to build. But unfortunately, the market only believes there's a 56% chance Clarity Act gets signed this year. Now, I've talked to a lot of folks in Washington, including our policy experts. It does seem like the odds are much higher. The prediction markets are trying to fight equilibrium, but I do think probability of passage is much higher than 56%. But of course, we know that big banks don't want this to happen. But keep in mind, the big banks don't write policy. Laws are to represent people, and that's why we have to keep in mind there are a lot of constituents that want to see the Clarity Act passed. If that passes, it's a big catalyst. The third positive catalyst is, of course, don't forget the White House is a very pro-Bitcoin, pro-crypto White House. It's also very good for the US dollar policy, especially with running stable points. The fourth is we have a new Fed chair, Kevin Warsh, and Kevin Warsh is pro-Bitcoin. And finally, the stock market has a massive tailwind. I know a lot of you guys may be bearish on equities because you think they've run too far, but at Footstrap, which is another hat I wear, we've been bullish on stocks structurally, and a lot of it has to do with this chart. This chart is the number of people in America aged 30 to 50. Every time it goes up, the US economy will grow faster than trend. And we are seeing this above trend because of millennials, Gen Z, and Gen Alpha. And as you can see on this chart, if you overlay equity returns with the number of people aged 30 to 50, the stock market has always risen parabolically. And this tells us that markets in the S&P could be 15,000 to 18,000 by the end of this decade. So these are the tailwinds for crypto. But of course, you're still going to wonder why crypto is so weak. And I think it's because people are forgetting that crypto is the future of money. Okay, the first thing I want to cover is Agentic in robotics and why crypto will play a role. This is a list of all the milestones since ChatGPT was introduced in 2023. Okay, and there's been significant advances in the last 3 years. Of course, the first was the launch in ChatGPT. The second, which happened in 2024, was when the agent systems began to develop capabilities to work with websites, interactive websites. Then the third big advancement has been robotics. Optimus Prime and their dexterity, and of course the new Crane building drones at industrial scale. And then finally, we're seeing superhuman capabilities develop. So OpenAI developed a solve an 80-year-old puzzle, and then Vigor AI launched a robot that actually builds and operate at scale in a warehouse. Okay. So that means the future robots are already going to dominate most traffic on the internet. And this is why Mark Andreessen and others have talked about this as being a reification, because if you got a robot system, you're going to have to control them. And that's where blockchain is much more effective than traditional rails and controlling what robots do. I mean, to give an example, whether it's authentication or identity or payment speed, all of these work better on crypto systems. And you're going to ask yourself, well, why hasn't this reflected in crypto prices? That's because the stock market is still working its way downstream. The first group that really benefited from the AI ecosystem was the semis. They're still going up. And then last year was memory stocks, and they're still in the process of re-rating. But as you can see, the market's starting to now see the AI benefit to the max, and it's working its way to software. People thought software was you lose with AI, but you can see this little parabolic spike. Software companies are benefiting from AI because they're developing the downstream applications. And finally, the future infrastructure of AI is going to be our crypto. So to me, it makes perfect sense that we're just working our way through, and I think this is just a matter of months. And if you don't think this is possible, look at the relationship between Ethereum and its software. They boot together in sync for a long time, and now we see a divergence where its software stocks have gone parabolic, and I think it's now just going to be, again, just a matter of weeks before Ethereum prices reflect this. The second story is tokenization. I've talked about this before, so I'm going to go through this quite quickly. But we know that Wall Street wants to tokenize, and also they believe the future of money is compute. In fact, it's many tech founders see this, and part of it is that we're already seeing the future. There's more stablecoin transaction volume than Visa today. And to the future, there's the belief that you have as much as $300 trillion tokenized in securities markets. And that's going to be tokenizing real estate, fixed income, equities, derivatives, land, and gold. And you can see the tokenized market today is absolutely tiny right here. Okay, so it's 300 trillion. How does this value crypto or benefit crypto? Keep in mind, crypto prices and the amount of assets tokenized are highly linked. So if a market is going to go to 300 trillion of asset value, Ethereum isn't going to stay at $200 billion total network value. And that's the reality, is that there's a few blockchains today that operate at scale. Okay. So what does this mean? Well, I think that means that crypto, which delivers a lot of efficiency, are going to replace a lot of the most profitable links today. So why don't we give you some examples? JP Morgan is the most profitable bank in the world, and they earn $60 billion. But there's a company called Jane Street. I don't know if there's anybody from Jane Street here, but they are just in the business of basically moving money around. And they're going to earn $40 billion this year. That's nearly as much money as JP Morgan, but they only have 3,000 employees. So with 1,000th the number of employees, they're almost as profitable as JP Morgan. Okay? And it's true, just moving money around is more valuable than keeping people's money. And crypto is very good at moving money around. And take a company like Tether. Tether probably going to earn $15 billion this year. It's a crypto native company, and they have 300 employees. if you quite tether with Jane Street,
You made more money than JP Morgan, and JP Morgan is the largest bank in the world. So you get the picture. Investors always give too much value to the incumbent. And I've highlighted this before. Whether in the auto industry, you might have bet on those horse buggy makers, or in digital media, you would have bet on used corporate buy comp. But as you can see, the new entrant is always the one that captures all the value. And so I think in the next 10 years, 5 of the 10 largest financial institutions will be crypto-native companies.
all right, so that gets me to the third point, which is the other thing that we have to keep in mind is
These smart contract platforms are probably have become monetary units of value because it's going to be easier to hold Ethereum, arguably, to a transaction than it is to hold dollars. And Elon Musk said this. He says in the future, we're not going to use dollars as a currency. It's just going to be compute and energy. And Standard Charter, for instance, had a recent report this week about Ethereum. And they made an analogy to Amazon, where there's a lot of tailwinds developing Ethereum, just like it was like in Amazon. But Amazon stock price stuck at $6. And as you know, today Amazon is more than 1,000x for error. So I think one thing to watch, of course, on this is just the Ethereum to Bitcoin ratio. Now, I'm going to jump through this really quick because I want to cover some other things, but if our view is correct that Ethereum is going to break out of this consolidation,
And the consolidation breakout is tokenization and AI.
I think that that's probably 50x or so the significant upside for Ethereum. And finally, I want to talk about foundations because in this world, a foundation isn't going to be the right point of centralization for a cryptocurrency. Okay, Vitalik wrote about this year. He says that the Ethereum Foundation is basically going to slit its role, that it's not going to be the entire centralized repository for all things Ethereum. And it makes sense because the Ethereum Foundation doesn't hold as much Ethereum as it used to. It used to hold 17% of the supply. And by 2020, you would see that number drop to 1%. Last year, when BitMine started its treasury business, that number dropped to 0.3. And today, Ethereum Foundation only owns 100,000 ETH to reclaim 1% of the supply cap. That's not a lot of Ethereum. That's about $200 million worth. And if you had to live off the typical sort of foundation model of 5% of return, they can only support about $10 million of grant efforts. But this is where the treasuries come in. The treasuries, which I've talked about the Ethereum treasuries, and there's in my sharply among others, now own 7% of the Ethereum supply. If you're an accountant, you know what a treasury stock is. Treasury stock is essentially supply currently taken out from the ecosystem, but we also own the yield. Now the yield is around 3%, so today these public treasuries are generating $500 million a year in rewards. And that is what we can use to fund and grants with the crypto ecosystem. BitMine, by the way, is 4.5% of that total, or 65% are basically all treasury buildings. Okay, well, this is where the plan's going to come together. Because pre-2024, before we had a friendly White House, foundations served important roles. They were funding public goods. They provided a lot of legal and operational infrastructure. They, of course, coordinated the ecosystem. They protected neutrality. And they were trying to bootstrap adoption. I mean, these are really important functions. But that made sense when we were in a DeFi world. I think now we're 2026. And in this world, a foundation role has to evolve. And I'll explain in a couple of weeks. But first, they still want to steward long-term research, right? Quantum resistance, privacy, how to make this blockchain relevant. They want to coordinate private sector efforts. That's really important. want to develop standards of best practices. I believe they're going to have a public role in terms of representing the ecosystem. But they want to strengthen decentralization. So why do we think this is necessary? Well, Ethereum's a 240 billion network value entity. It's been operating for 11 years, never a single day of downtime. There's 11,500 nodes, okay? And this is in 89 different countries. And there's 15,000 developers. I think this is too big to be coordinated by a single foundation. In fact, I did a lot of research. I said, okay, well, what are other industries have broad ecosystems and how do they coordinate? And I've got 3 examples here. In the mobile industry, which I think is the closest analogy to what happened in crypto, there's something called the CTIA. Now that was established in 82, has 1,000 members today, and they operate and develop all the standards around mobile. But everybody who actually is in the mobile business, who runs their own business, it's a really important center point for coordination. For the semi industry, which of course is super relevant today because in AI, they have the Semiconductor Industry Association and the World Semiconductor Council. And again, it's a centralized foundation, but it has a very limited role. And the third is the National Association of Broadcasters, which again, in the earliest days, they're the ones that had to create the broadcast industry. That was started in 1923. Today, of course, broadcast has its own enriched ecosystem, but these guys were the ones creating it in the beginning. So when I look at Ethereum, I think there's already the skeletons of that here. These are some examples of private companies that represent the ecosystem, and they're already doing enterprise engagement. Now, this list doesn't yet reflect the spin-outs coming from the Ethereum Foundation. There's at least 5 at core, and I think BitMine could play a role in orienting and supporting any of those that come out. And then you factor in the BitLine to the sharp links that collectively set 1% of the Ethereum supply and generate $500 million for rewards. So you could see, if you ask me, my opinion, I think Ethereum is in good hands because the foundation's going to be stronger by staying focused. You've got a lot of private sector companies already building products and core L2s in Ethereum. And of course, the Treasuries are here to help with funding and the granting. So I think we've already got the skeleton on the post-2026 foundation new roles. So if you're bearish, you are selling at the bottom. And again, I can't emphasize, I think if you're bearish today, you are bearish in the bottom. It's a Bitcoin and a euro. Okay, well, if you accept what I'm saying, then the Ethereum treasuries are really crying for the next bull cycle. And let me explain to you why. BitMine, for instance, has been doing a lot of building during this crypto winter. Okay. The first thing we did was we invested in a company called ACO, which sits on the intersection of AI and identity. The stock's done really well recently. If you haven't followed it, the ticker is FORS. And the biggest investment in ACO is fixing the largest public holder of the world of WorldCoin. Now, WorldCoin is Sam Altman's AI project, but it serves and does something very important. WorldChain is designed to provide proof of human and human verification in a world that's basically run by robots. And keep in mind, as I showed previously, today non-humans dominate traffic blitz, Kali market, web, emails, stock trading. Today when you're buying a stock, you're pretty much buying in from Roa, creating websites, product reviews. A fairy of all product reviews are fake. And even on Truer and Reddit, actually we know that in Reddit they pay this, they want to get rid of any of the bots posting. In fact, the CEO of Reddit, Lexus, has been in talks with World ID to make sure people have to confirm they're human before they post a comment. Well, that's FORS. Now, Oryx owns other stakes. Oryx actually owns a stake in OpenAI.
It's 28% of the balance sheet. It's a sanctioned holding because Orbs spends time with Sam Altman.
And Orbs also owns about 8% in MrBeast, 8% in Ethereum, and it has 34% healthy cash. Well, there's a similar private company holding co-entity called Fundrise, ticker VCX. They own similar AI-related volumes. That trades at 13 times NAV. If Orbs traded at the same multiple as VCX, Orbs, which is permanently $1, would be closer to $15 today. So it's about massively undervalued stock. Okay, the second thing that BitMine did was launch the largest staking operation in the world. It's not the largest staking operation for Ethereum. It is the largest staking operation, single staking operator in the world. And it's open for business. In fact, Maven already manages and stakes about $2 billion of other people's crypto, including Solana, Hyperliquid. I had to lead a process of onboarding a few other chains as super nodes. So we have about more than $14 billion of assets under management. And that you can see just our own Ethereum staked is generating a huge amount of rewards, about $1 million a day. So if you're wondering, why do you own BitMine if you own it, keep in mind the company makes $1 billion a day. You know, in my 30-minute presentation, that means we generated almost $200,000 of staking rewards. The third thing that BitMine's done is invested in MrBeast. I think this is a huge moonshot. If you don't know who he is, he's the greatest content creator in the world. By the way, they just revealed some financial data 2 weeks ago. Their revenues are over $1 billion today, growing revenues at over 50%. So to us, this is the biggest content creator in the world, already $1 billion business, growing at more than 50%, and now he wants to get into a bank. They bought Step Financial. In my opinion, MrBeast is going to become the next Robinhood, or the next SoFi, or the next Chime, but for Gen Z, Gen Alpha. There's 120 million up. That's a lot of people. Now, Gen Z and Gen Alpha may not be very wealthy today. The reason they're not wealthy is they're very young. But keep in mind, the boomers, when they started supporting Schwab, they weren't very wealthy either. Of course, today they're the richest generation ever. Gen X created BlackRock and Blackstone. Again, Gen X, when they were in their 20s, they weren't very wealthy. And on top of that, there's a huge wealth transfer cut. Millennials, Gen Z are going to carry $50 trillion, $60 trillion over the next 2 years. So if you want to bet on the next generation financial companies, bet on the companies that are relevant to Gen Z, Gen Alpha. And by the way, it's crypto as well. And finally, there's been some big milestones for BitMine. One I can publicly say is that we got uplisted to the big board of an NYSE. That's a big deal because very few companies are traded on the big board New York Stock Exchange, especially crypto companies. We are one of the few that are trading on the New York Stock Exchange, which is the most prestigious and venerable exchange in the world. But BitMine also meets the eligibility criteria to be added to the Russell 1000. Now, that was announced last week. The inclusion date is June 26th. Why does that matter? Well, the Russell 1000 is the most widely tracked index in the world. We'll be part of the Russell 1000 index. Every fund manager in the world who was benchmarked against the Russell 1000, and that's over $4 trillion mark, will have to decide if they want to own BitMine. And by the way, let's say the 1,600 active managers that are benchmarked to Russell 1000, remember 1,600 fund managers
and the Russell 1000 as their benchmark. BitMine has 25 of that as institutional holders. So that means there's 1,575 that will have to decide on June 26th if they want to outfit. And of course, I think that's a huge catalyst with stock beta issue. And finally, it's really Ethereum and what we're going to do, because, you know, we got to 100% of Ethereum in August. We got to 4% on April 10th. And we're at 4.5% today. We could get to 5% as early as the end of June. But we may or may not try to do that, because we're bullish on Ethereum. I think people would like us to see us feed our purchases, but one of the things that we're also debating is, whether it makes sense to unwind at 5%. So before having to make that decision, instead of crossing 5% and deciding, we're going to take our time. So we'll slowly base the accumulation until we've decided. And finally, keep in mind, in the final minute, that a proper DAT will have a form the crypto that it's exported against. Last year, from June 30 to December 31, we created BitMine on June 30th. Ethereum rose 22%. BitMine rose 500%. Now simply outperforming Ethereum. This year, Ethereum is down. I don't think it's going to be down for the full year, but you can see BitMine is outperforming on the downside. So if we're correct and Ethereum price rises, okay, the x-axis here is Ethereum. The y-axis is our stock price. It's 90% correlated, not surprisingly. But if Ethereum rises correct, Ethereum goes to 250,000, okay? That's going to be this very far right here. 250,000 ETH. Can't use BitMine spec at 5,000. It's a bargain at 18. But look, if Ethereum gets to 22,000, which I think is reasonable, our stock is 500. So if you ask me, again, you're better off buying the debts if you want to have a liquid holding for Treasuries. That's everything, and thank you very much.